Okay, in this video, we're going to be talking about what is the ICT power of three and how can you use it in your trading. Okay, so power of three simply means accumulation, manipulation, and then distribution. Okay, so that's what it is. And we're going to start with, I'm going to start with a little drawing here. Then we'll work our way over into a real chart example. So basically, here is just a rough depiction of a period of consolidation. Boom, there's a period of consolidation, okay? So what's happening during this period? This is a period where smart money, deep pockets is accumulating orders. They're getting their positions in during these, what we would call quiet times, okay? Now, if you're trading Forex, many times this will happen most commonly during Asian session is where you'll see a lot of times where these little accumulation phases will occur. And so what you want to see is you want to see that accumulation, and then a lot of times that manipulation will happen. Typically, it'll be right after midnight New York time. A lot of times you'll see the manipulation occur after that. So say, for example, this is our period of consolidation. Now pretend with me for a second that this is New York midnight, and what happens? Boom, we get a leg lower. Okay, we get a leg lower. And what you need to understand is the purpose of this manipulation phase is to, well, there's a couple reasons for it. So it wants to bait in short sellers. So just move lower, because pretend with me for a second that this is bullish. Okay, we have a bullish bias on this. This thing's going up. This leg lower right here serves the purpose to bait in short sellers. They want to get them on, smart money wants to get them on the opposite direction of the trend. They want to bait them in with that fake run lower, but also it wants to take out sell side liquidity. So we had this period of consolidation right here. It's knocking out existing sell orders in there, okay, from retail. And then what you want to see next is after the manipulation, that's when you'll usually see your distribution. So you get, meaning you'll get like your next leg higher, and it'll start to make its way up higher. Again, this happens, it depends on what time frame you trade, but power of three, it occurs on weekly, daily, and if you're even a real maniac with it and you really study it, even intraday, like intraday candles. But that's like for, you know, for the people that really want to get, I don't even go that precise with it. I don't put a lot of emphasis on power of three on intraday candles, but I know some people do, and some people kill it doing so. But that's basically what you want to, what I want to get across with this is you got your accumulation phase, then you got your manipulation, and then you got your distribution, which is where you get the move in the direction that it originally intended on moving to. Okay. And then if you're like shorting, then it's just the opposite. You know, it's just, you just flip it around. So this is our period of consolidation, which is AKA our accumulation phase. And then boom, what happens? Typically it'll be during, again, it's typically right after the bell or during London session, you'll see it. And then you'll get your fake run higher. So remember, this time we're looking at a bearish example. You'll see that fake run higher, engineer liquidity to take out existing buy stops, to fake in breakout buyers to get them into the position just to run them out a little bit later. So you get your accumulation, you get your manipulation to take them out, and then a lot of times what you'll see after it completes its objective of taking out those buy stops, running it or faking in those breakout buyers, it will do what? It'll pull the rug. Okay, it'll pull the rug. And so it completed two things here. It shook out, or it took out those previous buy stops, but it also, on this leg lower right here, whenever it started to move in the original in the real direction that it wanted to go, it also took out those breakout buyers that had their stops likely underneath of those lows. Okay, so then you get that move lower, boom, and then that's when you'll see like the real move, which we would call what? Distribution. Okay, so yeah, let's go to a real chart example. I don't want to drag this video out too long since I know people have the attention spans of a goldfish, so let's go to the chart. All right, so USD JPY, we're just going to look at one example here. I think this is like a really easy example to kind of drive home. So this is a bearish example. So this is, I'm going to note New York midnight, because like I just said, a lot of times what you'll see is you'll see the manipulation occur right after New York midnight. Okay. And so typically what you'll see is the manipulation is right here. If you look at my cursor, there's your manipulation run right after New York. Now this run It was coming up to do what? It was coming up to take out that high. See that? And retail are keeping their stops above that high. Okay, why? Because it's a level of resistance in their head, right? And basically they're looking for what? They're looking for it to not trade above that level of resistance. If it trades above it, it stops them out. Big money, deep pockets. They know this. That's what they do. That's their target. They want to take you out of the marketplace. They want to take your stops, right? So there's a manipulation just to come up to take your stops, okay? And also debate in breakout buyers, because breakout buyers, they see what? They see a breakout. It's breaking this level. It looks like it's running up. It's running up. It's running up. It's got a lot of strength towards it. It's got a lot of strength towards it, and then it pulls the rug. Okay, so you kind of kill two birds with one stone there. You take out the buy stops, but you also, on this move lower right here, like this move right here, you shake out those and you stop out those existing breakout buyers as well. Because where they likely going to keep their stop, probably underneath these lows is where the majority, because we know there's sell side here. This is a swing low level. It's also low of day. That's a big liquidity pool area. So right there, boom, we take them out. Okay, so you kill two birds with one stone. And this is what we would call our distribution. Tongue twister, but distribution. Okay. So again, this period during here, this is during Asian session. We had this is the accumulation, by the way. That's your accumulation. Okay. So smart money, they're doing what? They're accumulating orders. Okay. And then we got our midnight opening. What happens? We get our manipulation that run up higher just to take out, so they engineer liquidity into the marketplace to take out those buy stops, fake in breakout buyers. So that's number 2 of power 3. Again, accumulation, manipulation, distribution. And again, most commonly when you're like trading Forex, what you'll see is Asian session, you'll have many times that's where you'll see like the accumulation happen. Okay, that's when it's a little bit more quiet. And that's where smart money gets in. Again, smart money gets in when it's quiet, when there's not a lot happening. And then right after midnight New York, they engineer liquidity to take out existing players out of the marketplace. Okay, and the fake in players on the opposite end of where they really intend on, which is what we got right here. And then distribution, the real direction takes place. Okay. Now, so say you don't trade Forex and you're like, okay, but what if I don't trade Forex? What if I trade futures, Mike? Well, a lot of times that manipulation, and like say something like futures, for example, most commonly happens, there's a couple places. There's 8:30 because that's when the news embargo lifts. So like when they come out with news, a lot of times that is where you'll see that manipulation occur. Those run-on stops will be like at 8:30. But if there's really no significant news event taking place at 8:30, then your best bet is to wait until after the opening bell, which is 9:30 a.m. And that's another time where you'll see like fake runs. So like, for example, say the S&P it's bullish and it's heading higher, right? A lot of times when there's no news out on that particular day, a lot of times you'll see your fake runs lower, like right after the bell, like right after 9:30 a.m. or something in that particular period, and you'll get your fake run lower. Just again, if it's bullish, it's so intention is to come down, take out sell stops, maybe fill in a fair value gap, something along those lines, and then what'll happen? You'll usually get a reversal higher a little bit later, which is the real direction that it's headed in, which is that distribution. Okay. And then you had your accumulation happen beforehand, earlier on, right? But yeah, that's how you would play it. So like really simple concept, really straightforward, but really, really powerful once you really grasp it.